Let's talk a little bit about this official story versus the on-the-ground reality. I mean, there's a credibility gap, and you and I have discussed this before. We have that dovish Fed, strong housing headlines, but deeply stressed consumers. When do you see these conflicting signals? How does it fit into the historical lifestyle or life cycle pattern that you've studied for over 30 years here, Lynette?
Yeah, it's true. And that's really why the things that we would have expected, the normal setup inside of the system, everybody's going, wow, that's never happened before. Well, actually, yes, it has. These are all indications that we are at the end of this experiment. And frankly, it should be obvious to everybody that we are shifting into a new system.
I mean, when we spoke in January, you highlighted the constant revisions to data from the Fed, and we've seen those significant downward revisions to jobs, GDP all year long. How does this political battle over the data fit into a historical pattern of a currency's life cycle?
Well, it gets very invisible. And especially we know that Doge went in early part of the year and just sliced and diced a lot of those individuals that would actually be gathering and analyzing the data. So as bad as it was before, quite honestly, now we are flying absolutely blind. Absolutely blind. You don't like what the report comes out? Well, let's just fire someone because it's their fault. Well, I mean, how can you make an educated choice when you have no good information to work with? So this is really all an indication of the end of this currency's life cycle. And what most people don't realize, and Jeremy, this is the thing that has me seriously the most concerned, is that when President Trump signed the Genius Act, he changed the global monetary system. And I believe, so you can write this down and we'll talk about it in a few more months again. But there's really not one doubt in my mind, but that the stable coins, and you always have to be careful of how things are named because it's usually just the opposite, but the stable coins will be the mechanism that will usher in and actually create the hyperinflation that we need to do the ultimate shift into the new system. But that's happened already, so I'm really nervous about that.
I mean, the new administration has now fired the head of the BLS and installed E.J. Antony. He's an economist who for years has spent publicly stating the government's official inflation and jobs numbers are fundamentally flawed. And I should say, full disclosure, he's been a guest here on my show as well. How significant is this unprecedented political move?
Oh, wow. I mean, quite honestly, it's like you're driving over a cliff and they put this pretty picture in front of the cliff and you're not going to know when you hit it. You are not going to know. It's going to happen just that fast. So I think it's huge. And it goes to my very favorite question, which is how many times can you be lied to when you do not know the truth? And obviously the answer is every time. But this goes more than just, this takes it more than just the lie because we are flying blind. It's like you're in this huge airplane and the plane is coming down, but you cannot see where that mountain is, where that ground is, when you're going to hit, how you're going to hit. You have blindfolders on as you're flying this ginormous plane. And those that are sitting in the back, they have no idea how close we are to hitting. And those that are driving it, they have no idea either. It scares the Hades out of me. I'm not going to lie.
Your single biggest concern at the start of the year was the Treasury market. The Fed's dovish pivot seems to be direct response to the stress in that market. What is the hidden fragility that you see here?
Oh my God. Well, first of all, look at what's, we're going to have to go back to the stable coins because a big issue is the US Treasury market, which is the foundation of the global markets. But the traditional buyers and holders, well, gosh, they kind of started turning away starting in 2008 with the banks no longer being the buy and hold. Now, I know they've changed the rules, but it still takes a minute to ramp things back up, and foreign governments being the buyers and holders. And our two biggest buyers, Japan and China, well, they already started reducing their holdings and their buyings back in 2013. These are not things that come overnight. But if your foundation, you require these buyers and holders, but now it is in traders' hands, really what the administration is attempting to do, just like the administration did back in the early 70s when we went off the gold standard, is to create an artificial market for dollars and dollar-denominated debt. And whose shoulders are these going to be built on? It's on the public shoulders, which is just about the right size to fail if we stay splintered, right? If we stay as individuals, if we on a global basis come together in community, now we have a voice. If we don't do that, we have no voice. And we are being absolutely set up to fail in a very big way. And there's nobody you can complain to. There's nobody that you can talk to on this.
January, you told us spot market was a joke. And you said that the forecast was about 3,500 to 4,000 gold by now. We're below that, but not by much. I mean, did your forecast miss something, or is the paper market, is it the paper market that's lying about the true value of the physical metal?
Of course it is. That's spot on, Jeremy. It is always the paper market because that's just a trading market. Yeah. And since you and I spoke, look at how much of the physical market, because in the US, it's primarily just a digital market, a trading market. In Europe, it's been more of a physical market, but look at how much of that physical market was, and I'm going to use the term because I think that's what happened, repatriated back to the US from especially the Bank of England. And since it wasn't the Bank of England's gold, because they're not sitting on a whole lot of their personal gold, but they are sitting on a whole lot of other sovereign gold from countries around the world. So what gold did they ship over here to us? I'm thinking it was, and maybe I'm wrong about this, but I'm thinking it's a lot of that sovereign gold. What happens when the governments request their gold back? That still lies in our future. We haven't seen that yet, but that's going to overwhelm. I think, I could be wrong, but I think that will absolutely overwhelm the market's ability to hide the truth. And you can't go by the price that on anything. I don't care what it is. I mean, do you really think that stocks at nosebleed levels are a true valuation of what is happening in the economy? No.
So would those shortages then kind of expose the confidence in the official gold market?
Exactly. Yeah. Exactly. Because if enough governments request their gold back at one time, and we saw this a little snicker snack taste of it in 2014, 15, in there with the sovereign debt crisis in Europe. And a lot of countries at that time repatriated and asked for their gold back. And even the Federal Reserve of New York, when Germany asked for it, they said, okay, you can have it, but it's going to take us, I think, 6 or 7 years or something. It didn't quite take them that long. They got it back before that, but they had to buy a lot of time. And I think it's much worse now. So that lies in our future, but you need to have the physical metal in your possession, because if you don't hold it, you don't own it. Yeah. And if a government needs to do an overt confiscation in order to make that happen, they will. And if it's sitting in a retirement plan or something like that, where you're not holding it anyway, that's where most of it is in the US. Most of it's not held privately. Well, you're going to see that kind of explosion. And the truth will begin to express itself. It's not going to fully go there to its fundamental value yet.
Yeah.
That happens when they're attempting to regain confidence.
You argue that this is a human pattern. Let's end with the human element. I mean, looking at all the cycles that you've studied, what is the single most common mistake that ordinary people make when they begin to realize that the official story is untrue?
Oh, okay. So the mistake that they make when they realize that it's untrue, well, actually, then they double down on the fiat money lie because, and you'll see, and I do think that we've entered this piece, and that's the melt up phase where you see the crypto markets going up in terms of fiat money, dollars, or wherever you are in the world, and the stock markets, etc. Valuations don't mean anything. Central banks have trained the public to buy the dips no matter what. Mm-hmm. And I think that's the mistake that they make, thinking that that is going to maintain their ability to purchase when it really doesn't. And when they do that overnight reset, those markets reset real fast. Real fast, and you end up with nothing.
Yeah, just holding the bag. Sad state. I mean, you called this word hopium when we spoke in January to describe what was kind of holding that system together. After 8 months of crisis and intervention, what is the state of that hopium today?
I think it's alive and well, and I think that it just puts you in a much worse state, because insanity is defined as doing the same thing over and over again and expecting different results. Some people might call me crazy, but not insane.